perspective of geopolitics, and that is a whole other, probably rabbit hole to go down here. But the question is the Strait of Hormuz going to remain free flowing, not open or closed, just free flowing? Will ships captains decide that they want to brave the strait? Will insurance companies decide that they're going to insure those ships? It's not just about what the official narrative is. It's what are the people on the water actually doing. So that's one important thing to pay attention to. The second is that the AI narrative is really kind of breaking down. And what we were talking about a little bit last week was how the rotation out of the the perceived picks and shovels of the AI narrative was rotating, and it was rotating into quality, the Dow and the Russell. And the Dow and the Russell broke down as well too. And so, that narrative, the rotation into quality and small caps, is now broken as well. And then you have the potential dollar strength trade, and we can't confirm this yet. We have a 101 326 line in the sand that we're going to watch to see if it breaks here today. But if it should, then we've reconfirmed the dollar long, and the dollar strength trade is right back to the wrecking ball swinging and destroying everything that comes in contact with it. We also have bank inside of a short-term downtrend, which again puts a headwind against especially the Russell and the Dow. And there is a larger support level below us, but that support level will have to be confirmed. And then there's the VIX. And, no matter how many times, you've seen this happen, it is kind of amazing. When you think about a 61.8% line being the failure, and the risk reward ratio for a target from, say trading the 50, you can, based on your position size, know how many contracts that you need. And the closer you get to that 61.8% line, the more contracts in theory that market participants are piling on at those levels, with the failure level one tick below. And there's nothing else like it that I'm aware of in the market right now. It's quite an impressive thing to happen. And what happened at our highs here? Look at what happened as we ripped away from our double bottom inside of support. What also stick saved? The 61.8% line of the short. No confirmation. So we do not have confirmation on the dollar, and we do not have confirmation on the VIX. What does that mean? It means that this counter trend squeeze on the indices could just continue going straight up for all we know. And we're watching very closely here as we go into our morning to see what type of reaction that we get to the VIX's traditional short setup. Their traditional long setup, which has a line in the sand at the 75. What happens if that 75 breaks? Then the downtrend on the VIX is reconfirmed. And the indices uptrend is potentially confirmed as well. And we have to think about both sides of the market here. Now, that's not necessarily what we're expecting. We would expect that there's a group of individuals that probably is interested in buying volatility as this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.